In April 2026, a survey of 938 American investors found something Wall Street spent a century trying to prevent. 62% of them were now using artificial intelligence to help make their investment decisions. The edge that used to live in the tall glass buildings had quietly leaked out. The tools that once cost a hedge fund a fortune now cost you about $14 a month. Here's the part nobody's selling you, these apps wants to say out loud. AI is worst at the exact thing you most want it for. It's a brilliant research analyst and a terrible fortune teller. Confuse the two, and it will cost you. So let's walk through the 5 AI toolkits people are actually using to build wealth in 2026, and exactly where each one helps and where it bites. Toolkit 1, the research assistance. This is where AI genuinely earns its keep. Apps like Public's Alpha, FinChat, and Magnifi let you ask a question in plain English. What happened with NVIDIA's last earnings? And get a clear answer in seconds. Magnifi, built by Danelfin, plugs into more than 15,000 stocks and funds and costs around $8 a month. It can scan your whole portfolio for hidden risk, overlapping funds, and fees you didn't even know you were paying. Used this way, AI does in 30 seconds what used to take an analyst an afternoon, reading filings, comparing companies, summarizing the boring pages most people skip. Read the fine print. Public's own disclaimer calls its alpha assistant experimental technology that may give inaccurate or inappropriate responses. Translation: it's a research assistant, not a financial advisor. Verify everything before you act on it. Toolkit 2, the stock pickers. This is where it gets seductive and dangerous. Platforms like Danelfin score thousands of stocks with an AI rating from 1 to 10, estimating each one's odds of beating the market over the next 3 months. Danelfin advertises that its AI best stock strategy returned 376% since 2017, against just 166% for the S&P 500. Numbers like that are pure catnip, but that's a backlisted marketing claim from the company selling the product. One investor spent a full year and $5,700 letting GPT-4 pick his trades against the S&P 500. Some years it edged the market, some years it badly missed. The honest takeaway, it was a coin flip with extra steps. Fewer than 1 in 10 professional fund managers beat a simple index fund over a decade. An AI that promises to do it easily is promising the impossible cheaply. And if you think that's just theory, in late 2025, a research lab called NOF1 ran the cleanest test anyone's tried. They handed 6 of the world's most advanced AIs $10,000 each, real money, and told them to trade live markets. No backlists, no paper trading. GPT-5, Claude, Gemini, Grok, DeepSeek, and Alibaba's QN all turned loose on live crypto, head-to-head, with the whole world watching the scoreboard. They called it Alpha Arena, and the results were not subtle. Within weeks, the leaderboard looked like a casino floor. DeepSeek and QN more than doubled their money. GPT-5 lost 60%. Gemini was down even harder. Same markets, same data, same instructions, wildly different outcomes, depending on which model you happen to back. Now read that carefully, because it's the whole lesson of this video in one experiment. These are the exact same models people quietly ask, what should I buy? Force them to actually put money down, and they don't agree, and most of them lose. A tool this brilliant at explaining the market can still be a coin flip at beating it. Never confuse the two. Toolkit 3, the money management agents. And this is where AI quietly changes the most lives. Cleo is an AI that roasts your spending in plain English, then automatically moves small amounts into savings while you're not looking. It now has over 7 million users and around $280 million in annual revenue, growing more than 100% a year. Copilot and Monarch do something less flashy but more powerful. They pull every account onto one screen and use AI to categorize where your money actually goes. For about $100 a year, you get the kind of cash flow clarity that used to require a bookkeeper. Because automating the boring part, saving, tracking, rebalancing, is what actually builds wealth, far more than any hot stock pick. But even here, watch the incentives. Cleo settled a $17 million case with the FTC over misleading claims about its cash advances. An app that makes money when you borrow is not a neutral friend. Use the tracking. Be careful with the lending. Toolkit 4, the chatbots you already have. ChatGPT and Claude are now the most common investing tools of all. In that 2026 survey, 54% of investors said they'd used a chatbot for investing research, more than any dedicated app. And they're genuinely good at it. Explaining what a P/E ratio means, drafting a budget, turning a company's 100-page annual report into plain language. Used as a tutor, a free AI can teach you more about money in a month than most people learn in a decade. Ask it to predict next quarter, or to tell you what to buy, and you've crossed the line from analysis into fortune-telling. These models hallucinate. They will state a wrong number with total confidence, and on your money, that confidence is the trap. Toolkit 5, the autopilots. Robo-advisors that don't just track your money, they invest it for you automatically and chip away at your tax bill while they do it. The two giants are Betterment and Wealthfront. Between them, they manage tens of billions. Betterment alone crossed $70 billion in assets this year. Pitch: answer a few questions, deposit, and an algorithm builds you a diversified portfolio of low-cost index funds and rebalances it for you forever. Both charge about 0.25% a year. On $10,000, that's $25 for a fully managed, hands-off portfolio. And here's why that number matters. A traditional advisor charging 1% doesn't really cost you 1%. Over 30 years, that single point can quietly eat more than 1/4 of your entire portfolio. Fees are the silent tax on your future. The real magic trick is tax loss harvesting. When an investment dips, the robo sells it, books the loss to cut your taxes, then buys something nearly identical so you stay invested. Done every day, automatically, that can add roughly 0.5% a year. Pure tax efficiency you'd never have the patience to do by hand. Wealthfront goes further with direct indexing. Past $100,000, it buys the individual stocks in the index, so it can harvest losses on each one. Be honest about who this is for. The tax magic mostly matters on large, taxable accounts. In a normal retirement account, most of it does nothing. And remember, a robo-advisor is automation, not genius. It won't beat the market. It just keeps you in it cheaply without letting you panic sell at the bottom. For a set-it-and-forget-it investor, that discipline beats any hot tip. But whatever toolkit tempts you, the same warning applies. This industry has learned exactly what you want to hear. And it's not just the free tools you have to watch. In March 2024, the SEC brought its first-ever AI washing charges. 2 investment advisors were fined $400,000 for claiming to use AI they weren't actually using, and the agency has kept filing similar cases ever since. When everyone slaps AI-powered on the box, the label stops meaning anything. The technology is real, a lot of the marketing is not. And if the marketing is bad, the outright scams are worse, because AI handed con artists a brand new costume. In 2026, the SEC charged a Texas man who raised over $12 million promising fat returns from AI trading bots. Only 3% of the money was ever actually traded. The rest vanished. The playbook is everywhere. Fake AI signal groups on Telegram, copy trading platforms with invented track records, deepfake videos of famous investors endorsing tools they've never heard of. So here's your filter. Anything promising guaranteed or monthly returns is lying. The best quant fund in history averaged under 40% a year, and they're geniuses with billions. Before you wire a cent, verify the firm on the SEC's own Edgar database and FINRA broker check. Real platforms talk about risk. Scams only talk about returns. Here's the deeper twist. Since ChatGPT launched, J.P. Morgan found AI-related stocks drove about 75% of the S&P 500's gains. 7 companies made up more than half the market's entire rise in 2025. The AI boom is real, but it's dangerously concentrated. So the same AI hype lifting your portfolio is exactly what makes it fragile. And a 2025 study of individual investors found the uncomfortable pattern. People who used AI to analyze did better. People who used it to forecast and pick did worse. Same tool, opposite outcomes. The difference was entirely in how they used it. So how do you actually use all this without getting burned? Let me hand you the exact playbook. A complete AI money stack for under $30 a month. The whole Wall Street toolkit in your pocket. 1. A research assistant like Magnifi or Publix Alpha to read filings and scan your portfolio. Around $8 a month. 2. A budgeting agent like Cleo, Copilot, or Monarch to track every account and automate saving. Roughly $10. 3. A free chatbot, ChatGPT or Claude, as your around-the-clock finance tutor. $0. And 4. A robo-advisor quietly running your long-term portfolio on autopilot for 0.25% a year. That's an analyst, a bookkeeper, a teacher, and a portfolio manager for less than you spend on coffee. But a stack is only as smart as the questions you ask it. So steal these 3 prompts. Everyone uses AI as an analyst, never an oracle. Prompt 1 for your portfolio. Scan these holdings for overlap, hidden fees, and concentration risk, and show me what I actually own. In 30 seconds, you'll see the duplicate funds and the fees quietly bleeding your returns, the work that used to cost an afternoon. Prompt 2 for any company. Explain this annual report in plain English and flag the 3 biggest risks management is downplaying. You just turned 100 dense pages into a briefing without trusting the AI to predict the stock. Prompt 3 for your life. Here's my income and spending. Build me a monthly budget and find 3 places I'm leaking money. Notice the pattern. Every prompt asks AI to explain, organize, or analyze. Not one asks it what's going to happen next. That single discipline, analyst, never oracle, is the line between the people AI makes richer and the people it quietly makes poorer. Quick one before we wrap, and full disclosure, this one's mine. Remember that prompt for reading an annual report? I built an app that does exactly that privately. It's called Anvit. Anvit lets you chat with your PDFs and Word documents, your reports, filings, and statements, and get answers with cited sources. The difference? It runs 100% offline on your phone. No cloud, no tracking, your files never leave your device. It's powered by on-device AI, agentic retrieval with a local model, so it's the private way to keep that research analyst in your pocket. Anvit is free on the Google Play Store, and the link is in the description. Which brings us back to the start. AI really has leveled the playing field, but not the way the ads promise. It didn't hand you a crystal ball. It handed you the cheapest research analyst in history. The people building real wealth with AI in 2026 aren't asking it, what should I buy? They're asking it to explain, to summarize, to organize, and to automate. They let AI do the reading and the math, and they keep the judgment for themselves. The edge that used to live in the tall glass buildings is genuinely in your pocket now. Whether it builds your wealth or wrecks, it comes down to one question. Are you using it as an analyst or trusting it as an oracle? Get that right, and your money finally starts working as hard as you do. If this helped, hit subscribe to Finance Compiled. We turn the noise of money, markets, and AI into clear, no-nonsense videos, so your money finally works as hard as you do.